All right, guys, so let's move on. All right. However, there are also cons associated with investing in real estate, and we'll move on to that. All right. The upfront cost of buying a property can be high. For example, like land, and if you're buying an existing structure, it's more expensive. And now, many of these software programs and market fluctuations can lead to a decline in property values. Property management and maintenance can be challenging, and finding suitable properties can be difficult. This is a task that a lot of real estate investors go through all the time, finding properties that are suitable. The most important thing is location when it comes to real estate. You know, you want it's based really on who you're really targeting for these type of investments. All right. Um, so investing in like the urban or the suburban area. Investing in real estate, another video. Peace out. You get investments for real estate investors um, and make informed decisions. A lot of the working class, etc. And these people are always looking for homes, mortgages, and whatnot. So it's a great option for any newbie real estate investor to develop an effect. All right. So there are also tenant-related risk, such as vacancy and non-payment of rent. Truly a red liquidity issues. This is a common issue that most investors go through almost all of the time with tenants. Some tenants if they don't receive their salaries, um, if they basically don't have the money to pay, you lose money because you have costs like you have expenses that will accrue over time of their occupation, of accommodating them and so forth. And they're not paying their rent. So that's like when it comes to renting properties, that's the number one issue that investors face. It's a big issue. As the world modernizes today, there are a lot of things that are being put in place to avoid landlords being exposed to such great risks. For example, like in the UK, there's a system that you have to go through with regards to tenants. There's a system that you have to go through now where they do background checks and all these sorts of different things, and with your jobs, etc. And you have to put down a deposit through the government and whatnot. They're making really great advances in the real estate industry in the UK. All right. So let's move on for the purpose of this article. All right. Now, I wrote this article a couple weeks back, and as I said, it's strictly geared for beginners, but it's really to give you all that, thorough guide on what you will need to start investing in real estate. So let's move on to that. So the purpose of this article is to provide a comprehensive guide for beginners who are interested in investing in real estate. It will cover different types of real estate investments, the advantages and disadvantages of investing in real estate, factors to consider before investing, steps to get started in the real estate business. Moreover, it will provide tips on how to buy property and the tools and resources needed to be successful. This article will also include real-life examples of real estate investing success stories to inspire beginners to take action and start investing in real estate. All right, so let's move on. Now, understanding real estate investing. Real estate investments come in various types and offer different advantages and disadvantages. Understanding the different types can help investors decide which one is best suited for their goals and risk tolerance. Residential real estate investments. Residential real estate investments are properties that are used primarily for residential purposes. These include single family homes, multi-family homes, condominiums, and vacation homes. All right. Um, and then we have single family homes. So I have a description here. I need a description of what a single family home is. All right. So let's go. The single family home are the most common type of residential real estate investment. So you would see like a flat um, home, a one-story home. So most common. Um, 3 bedrooms, 2 baths. That's the most common type of residential home that you would find on the market today. They are standalone properties that house one family and are typically bought as a primary residence or as a rental property. For example, things like Airbnb and so forth. These single family homes come in really handy. They're not as expensive as multi-family homes, and which means basically that the cost of initial investment is low, right? Investing in single family homes can provide steady cash flow through rental income and appreciation in the long run. Then we move on to multi-family homes. Multi-family homes are residential properties that house multiple families or tenants. These can be duplexes, triplexes, or apartment buildings. Multi-family homes offer higher potential for cash flow and economies of scale, as one property can generate rental income from multiple tenants. And this is a perfect example of a great investment with regards to real estate investment. So a lot of people, they would take let's just say example, you have a piece of property that's 200 feet by 200 feet. So yeah, that's length and that's width, right? That's more so, um, that's a pretty large piece of property that you're talking about, right? And some people might build a single story structure on something like that and look to sell it, but or rent it out. But if you try to sell those type of properties, it's that's a one-time deal. You know what I mean? Renting it out would always be the better option, right? Um, so yeah. Um, then we move on to condominiums. Condominiums or condos. Condos are individual units within a larger building or complex. They offer ownership of individual units and shared ownership of common areas. Investing in condominiums can provide cash flow through rental income and appreciation, but also has challenges such as association fees and potential special assessments. My personal problem with these things, in a lot of communities or gated communities, etc., you would find that landlords are doing what you would call HOA or homeowner association fees. Um, Around the world, a lot of people have a big issue with this. But those fees come into play with most of the time multifamily structures, as I would have mentioned before, with duplexes and so forth, apartment buildings. There would be maintenance for around the home. And while a landlord may try to offset that cost as much as possible, you know, those fees can be sometimes really high for maintaining lawn, having a on-site handyman, in case of any repairs that may be needed by any individual tenant, these fees tend to add up. All right. So now we have vacation homes. Vacation homes are properties that are used primarily as a vacation destination, such as a beach house or cabin. These can be rented out for short-term vacation rentals, but also have challenges such as seasonal fluctuations in demand and high maintenance costs. And a perfect example of that is a beach house. In the Caribbean, especially, a lot of beach homes, they tend to suffer on the off season. Um, in the Caribbean, um, their vacation time falls within the June to September time frame, and that's something that's throughout the entire Caribbean. You teens are off from schools. Teachers are off from work, lecturers, etc. Um, some businesses, I believe, are even closed. You know what I mean? And they vacation within that time frame, but that's just 3 to 4 months for the year, and then you have another 8, and then you have remaining 8 months for that year. So, what are you gonna do with what are you gonna do about income? And that's the biggest issue with investing in vacation homes. People don't vacation all the time, and it's a season. That's a seasonal thing, obviously. So it's not the, the most viable option when going into investing in real estate. And then we have commercial and real estate investments. Right? Commercial real estate investments are properties that are used for commercial purposes, such as office buildings, retail properties, industrial properties, and hotels and motels. All right, that's basically fiscal stuff. So I'm not gonna go into in depth with that. All right. So we have office buildings. Office buildings, that's commercial properties that are primarily used for business purposes such as professional services and administration. Investing in office buildings can provide steady rental income, but also has risks such as vacancies and market demand fluctuations. And that's in the US, they have a lot of office buildings where very small companies can go and rent a space to operate out of. This is something that's highly prominent in the New York area and California, specifically Los Angeles. Um, you'd find that a lot of small business owners they have they set up shop office space in these office buildings and they rent it out. You know, again, this is not something that I I don't think it's a great option for real estate, but it has its upsides at the same time. And then we move on to retail properties. Retail properties are commercial properties that are used for retail purposes, such as shopping centers, malls, and standalone retail stores. Investing in retail properties can provide high rental income, but also has a risk, such as changes in consumer behavior and competition from online retailers. So we're going to move on to industrial properties. Industrial properties are commercial properties that are used for industrial purposes such as warehouses and factories. Investing in industrial properties can provide stable rental income and long-term leases, but also has risks such as environmental regulations and changing industry demands. Next, we have hotels and motels. Hotels and motels are commercial properties that provide temporary accommodations for travelers. Investing in hotels and motels can provide high returns through occupancy rates and daily rental rates, but also has risks such as seasonality and market competition. Motels is something that's really prominent in the US. They have a lot of daily rental motels over there, and yeah, you see them in the movies all the time. Obviously, you just check in and they cost like $5, $10, $15. Um, it's not something that's a great option, but it's an option. All right. So now we're going to look at the other types of real estate investments. Apart from traditional real estate investments, there are also other options available to investors. So we have real estate investment trust. Right. Now, a real estate investment trust, or an REIT, are companies that own and operate income-producing real estate properties. REITs provide investors with an opportunity to invest in real estate without the responsibilities of property management. They are also traded on stock exchanges, making them easily accessible. This is more for someone who invests in the stock market. It takes a lot more investigating, but it's completely online at the same time. So there's that. You can do that from the comfort of your own home, but it takes away the problem of having to deal hand in hand with clients and so forth. All right. And next we have crowdfunding platforms for real estate investments. Crowdfunding platforms for real estate investments allow investors to pool their funds together to invest in a particular property. This provides access to real estate investments with lower capital requirements, but also has risks such as lack of control and limited liquidity. Next, we have the advantages of investing in real estate. Real estate investing has gained popularity over the years due to the many benefits it offers. In this section, we will discuss the advantages of investing in real estate, which include 1. The tangible asset factor. Real estate is a tangible asset, meaning it has physical form and can be seen and touched. Unlike stocks and bonds, which are intangible assets, real estate provides a sense of security and stability. Investing in land for sale or homes for sale, for instance, provides the investor with a physical asset they can see and touch. This can give them peace of mind, knowing they have a valuable asset they can rely on. And as I mentioned, or real estate for hundreds of years has always been one of the best options for investing in money and keeping it as a safe haven for time, working against time and so forth. All right. Next, we have the potential for long-term appreciation. Investing in real estate provides the potential for long-term appreciation. Over time, real estate tends to appreciate in value, which means the property becomes more valuable than it was when it was purchased. This appreciation can be due to factors such as inflation, demand for real estate in the area, and improvements made to the property. As such, investing in real estate can provide a good return on investment over the long term. Next, we have passive income through rental income. Another advantage of investing in real estate is the opportunity to generate passive income through rental income. Real estate investors can purchase properties such as multi-family homes or commercial buildings and rent them out to tenants. This rental income can provide a steady stream of passive income that can be used to offset the costs of owning the property, such as mortgage payments, property taxes, and maintenance expenses. And, a lot of people around the world, there are people who live in large homes and whatnot, and they rent out rooms in their home, you know, um, and having something like that, it brings in a passive income. Now, it's not that you're going to be heavily invested in real estate, but it's a passive income to bring in to take care of certain things probably around your home. You might have an extra bedroom or two, an extra kitchen somewhere that can rent out and make some extra money. For example, like Airbnb. Lots of people do that, and they make that extra income to take care of taxes and mortgage payments and so on and so forth. People pay off their mortgage payment compared to 30 years. They do it out in sometimes 10 years. So it's a great option, right? And then there's the tax benefits. Real estate investors can also take advantage of various tax benefits. For instance, rental income is generally taxed at a lower rate than earned income, and real estate investors can deduct expenses related to owning the property, such as mortgage interest, property taxes, and depreciation. Additionally, real estate investors can defer capital gains taxes by using a 1031 exchange, which allows them to sell a property and reinvest the proceeds into a new property without paying capital gains taxes on the sale. Next, we have portfolio diversification. Investing in real estate can also provide portfolio diversification. Real estate investments do not always move in tandem with the stock market, which can provide a hedge against market volatility. As such, real estate investments can help diversify an investor's portfolio and reduce their overall risk. Next, we have risk and challenges of investing in real estate. Real estate investing can offer significant financial rewards, but it also comes with a number of risks and challenges that must be considered before making an investment. One of the biggest barriers to entry for many real estate investors is the high upfront costs. Depending on the type of investment, investors may need to come up with a large down payment, pay for inspections, appraisals, closing costs, and have the cash on hand for any necessary repairs or renovations. While these costs can be daunting, there are ways to mitigate them. For example, working with a real estate agent who has access to land for sale may help investors find properties at a lower cost. Additionally, finding creative financing options, such as seller financing or private money lenders can help investors avoid large down payments and other upfront costs. Market fluctuations. Real estate markets can be highly volatile, with prices fluctuating rapidly based on a variety of factors such as economic conditions, interest rates, and local supply and demand. These fluctuations can be difficult to predict, and investors who are not prepared to weather short-term market swings may find themselves in financial trouble. One way to mitigate this risk is to invest for the long term, rather than trying to make quick profits. By holding on to properties for several years or even decades, investors may be able to ride out any market fluctuations and see significant long-term appreciation. All right. Next, we have property management and maintenance. Owning real estate can also come with a number of ongoing expenses related to property management and maintenance. Landlords may need to pay for repairs, upgrades, and maintenance on a regular basis, as well as pay for utilities and other expenses related to owning and operating a rental property. Investors can mitigate these risks by working with a reputable property management company which can handle the day-to-day responsibilities of owning and operating rental properties. Additionally, conducting regular inspections and preventative maintenance can help prevent larger, more expensive problems down the line. And now we move on to difficulty in finding suitable properties. This is something I mentioned earlier in an earlier slide, and how hard it is for investors to find suitable properties. This is probably the number one problem with investing in real estate. Compared to price, um, or probably after price, location is biggest um, the biggest factor when choosing what exactly to invest in. Okay, so finding suitable properties can also be a challenge, particularly in markets with low inventory or high demand. In some cases, investors may need to compete with other buyers to secure properties, or may need to settle for less than ideal properties in order to make an investment. Working with a real estate agent who is experienced in real estate investment properties can be a valuable asset in this situation. Agents who specialize in real estate business can help investors identify properties that meet their investment goals and negotiate favorable terms. Next, we have tenant-related risk. Investors who choose to rent out their properties may also face a number of risks related to tenants. This can include tenants who fail to pay rent, damage the property, or violate the terms of their lease. Mitigating these risks can involve conducting thorough tenant screenings, requiring security deposits, and having clear and enforceable lease agreements. Working with a property management company can also help mitigate tenant-related risks by handling tenant screenings, collecting rent, and enforcing lease agreements. Next, we have liquidity issues. Real estate investments are typically illiquid, meaning that they cannot be easily bought or sold like stocks or bonds. This can make it difficult for investors who need to access their funds quickly or who need to sell their properties during a downturn. To mitigate this risk, investors should have a clear exit strategy in place before making an investment. This may involve having a plan to sell a property after a certain period of time or having a backup plan in case the property cannot be sold for the desired price. And now we look at, well, before we move on to the next thing, liquidity issues is a major issue that plagues the real estate industry. Now, I would have mentioned previously about certain things that hamper buying a property, and liquidity is a factor that you should always consider when buying property. Sometimes problems may arise, sometimes there are emergencies, sometimes you may be getting a once in a lifetime deal on something else, and you may just need the money to move on to something that's better. So, my advice is to anyone that may be interested in getting into real estate that you should always look at properties that are highly liquid. All right, so we move on now to factors to consider before investing in real estate. So, first up is personal finance and investment goals. Investing in real estate requires a significant amount of capital, so it's essential to have a solid financial foundation and clear investment goals. Before investing, it is crucial to evaluate personal finances and determine what level of risk is acceptable. Real estate investing should be considered as a long-term strategy, so goals should be set accordingly. Some investors may aim to generate passive income from a rental property, while others may be interested in flipping properties for quick profit. Personal finance goals will shape the investment strategy and guide their selection of properties. Next, we have market conditions and trends. Real estate markets. Real estate markets. Real estate markets are influenced by various factors such as economic conditions, interest rates, and local demand. Researching the current state of the real estate market is crucial for investors to make informed decisions. Investors should analyze the market trend and conditions to determine if it's a good time to invest in real estate. For instance, a market with a high demand for rental properties may present an opportunity for investors to generate passive income. However, a market with a high number of homes for sale may be less favorable for real estate investment. And this comes back to the laws of economics with demand and supply. Obviously, investing in a market where it's very dense with properties, there's different things that you need to give consideration to. Even though there may be a lot of properties that may be for sale, you need to consider your strategy when investing. Who exactly is your target market? So doing this, a business plan is something that would come in handy when doing any type of investment, any type of business strategy. We did another video on a business plan, how to properly execute a business plan, how to outline and set up a proper business plan for any type of business. We did that in another video, so you guys can go check that out. All right, so location and property type. Let's move on to that. The location and type of property are crucial factors to consider when investing in real estate. The location of the property can determine its value and potential for appreciation. Properties in desirable locations with excellent access to amenities and transportation tend to hold their value and appreciate faster. The type of property or that type of property is also essential, as different properties can provide different investment opportunities. For example, investors may choose to invest in residential properties, commercial properties, or land for sale. Each property type presents unique risk and rewards. Real estate investing typically requires financing options and terms. Real estate investing typically requires significant capital investment, so it's important to understand financing options and terms. Investors may choose to finance the investment through personal savings, loans, or partnership agreements. Investors must understand the financing terms, including interest rates, loan terms, and repayment schedules. A good understanding of financing options and terms can help investors make informed decisions and ensure that they can sustain their investment over time. Next, we have due diligence and property inspection. Before investing in real estate, investors must conduct thorough due diligence and property inspection. Due diligence involves researching the property's history, zoning laws, and any legal restrictions. Investors should also conduct property inspections to identify any potential issues that may be required for repairs or maintenance, and so forth. A property inspection can help investors avoid hidden costs and liabilities, it's essential to work with a qualified real estate agent to help with due diligence and property inspection. And next we have your exit strategy. Investors must have an exit strategy when investing in real estate. An exit strategy is a plan for selling the property or liquidating the investment. Real estate investors may choose to sell the property for a profit, refinance the investment, or convert the property into rental property for passive income. Having an exit strategy can help our investors avoid financial losses and make informed investment decisions. Real estate investors must understand their investment goals and financial capabilities to develop an effective exit strategy. As I would have mentioned to you a little bit about liquidity. This falls under exit strategy, obviously. It's something that you, as a new investor or potential investor, should give a lot of consideration towards. So next we're going to be looking at the tools and resources for real estate investing. As with any business venture, investing in real estate requires access to the right tools and resources to ensure success. Here are some key resources to consider. 1, we have real estate investment software. So the real estate investment software can help investors evaluate potential properties and make informed decisions. Many of these software programs offer features such as property analysis tools, investment tracking and reporting. By using real estate investment software, investors can save time and reduce risk of costly mistakes. Examples of popular real estate investment software include Real Data, Property Metrics, and REI Pro. All right. Next, we're going to look at real estate investment courses and books. Investing in real estate can be a complex and intimidating process, especially for beginners. Real estate investment courses and books can provide valuable insights and education on the fundamentals of the industry. Some popular courses and books include The Book on Rental Property Investing by Brandon Turner, The Millionaire Real Estate Investor by Gary Keller, and the Real Estate Investment Certification Program offered by the National Association of Realtors. Now, this is offered in the US. I'm not sure how they will do this in your country or what books may be your best course of action with regards to this. Next, we have online resources for market research and analysis. Investors need to be well informed about market trends and conditions to make informed decisions. There are many online resources available for market research and analysis, including Zillow, Trulia, Redfin, and Realtor.com. These websites provide information on homes for sale, real estate trends, and other valuable data that can help investors make informed decisions about investing in real estate. Next, we have real estate agents and brokers. But before we get onto that, I'd like to touch on the online aspect with regards to Zillow and Trulia. These are online websites that you can just use your mobile device or whatnot and log on to, and they have. I'm saying from experience. I'm speaking from experience. Zillow and Trulia are, I would say they are the best websites available for tracking a property. You could check that out yourself. Zillow.com or Trulia.com, and they offer a lot of insight on every property that's listed on their website. So that is something that really comes in handy. So next we have real estate agents and brokers. Real estate agents and brokers are essential resources for investors looking to buy or sell property. A good real estate agent or broker can provide valuable insights into the local real estate market and help investors find the best deals. They can also help investors navigate the buying and selling process, negotiate deals, and provide referrals to other professionals, such as property inspectors and appraisers. And next, we have property management services. Owning and managing rental properties can be a time-consuming and challenging task. Property management services can help investors manage their rental properties efficiently and effectively. These services can handle tasks such as rent collection, property maintenance, tenant screening, and lease management. Hiring a property management service can free up an investor's time and help ensure that their properties are well maintained and profitable. Next, we have real estate attorneys and accountants. Investing in real estate can involve complex legal and financial issues. Real estate attorneys and accountants can provide valuable advice and guidance on these matters. Attorneys can help investors with tasks such as drafting purchase agreements, reviewing contracts, and resolving disputes. Accountants can help investors with tasks such as tax planning, financial reporting, and budgeting. All right. So this. So, guys, we've now come to the end of our presentation for today. I hope this was in some way informative to you all, and I'll be posting another video this week with regards to real estate. Alright, so guys, stay tuned. This is Wallet Insiders, and I hope to see you guys in another video. Peace out.